With me is Dr. Niranjan Hiranandani today, and sir, I have a quick couple of questions for you, and thanks for taking the time out and speaking with ET now. First up, tell us about the new Maharashtra rules that have come into place where the funds that are received by a developer have to be split into 3 different accounts. Tell us what impact do you think this is going to have on developers and their performance?
Whenever there is any misuse of funds of which is requirement under RERA, obviously a reaction has taken place. So Maharashtra wants to ensure that under no circumstances there can be any misuse. So I think the intent is very correct as far as Maharashtra is concerned. We'll have to see for the implementation how it will not become bureaucratic. So I'm just hoping that the regulation should be such that the liquidity of funds should not be impeded. But the purpose, I hope, it will be met by such a regulation. So regulation is positive, but we have to see how, when there is over control by an authority, how will the liquidity go for the companies which actually execute this thing.
I also want to talk to you about another regulation coming in, and this is on the back of RBI's project financing norms. Now earlier, the loan amount that was taken by developers, out of that 0.4% was kept as provisions. Now you have 5% that has to be kept as provisions. So are you seeing any impact on this also? Are you penciling in some slowdown coming in terms of the financing that they receive or the project completion cycle that takes place?
Yes, I think it will definitely impede the flow of funds to the corporates which are actually doing development. So, and I don't think that it's a correct thing to do, because the cost of funds will go up, which means housing will become more expensive, because ultimately interest cost is to be paid by the customer ultimately. Number 2, the NPA in home loans is very, very, very low, less than 2%. So I don't see any reason for having brought this kind of provision into the marketplace. So I do hope that at some point of time RBI will reverse this decision and it will go back to the original.
And sir, according to data we are getting from agencies, Mumbai registrations are at a 12-year high. Do you think this kind of demand that we are seeing, the sudden upswing that we've seen after COVID, do you think there are more legs to this rally? Do you see this demand sustaining going ahead as well?
It's my guesstimate that the next 1 year we will see at least a growth between 10 to 15% compounded to the top of what you have seen this year. So number 2, you have to understand that the PMAY scheme is also extended, which means the interest subvention of almost 60,000 crores of rupees will go into affordable housing in the next 5 years as interest subvention alone in India. So I think growth of the story is definitely taking place in the affordable segment, mid segment and higher segment. Most of the companies which are giving home loans have predicted 20% rise in the offering of home loans on the top of this particular position that is there today. So I think there's a huge growth story which you're going to see, and it's a tremendous story that we will see in the next couple of years. Also, Niti Aayog has also made a statement that just now housing is about 7% of GDP. In next 5 years, when it becomes $5 trillion economy, housing and infrastructure will be 20% of GDP, means $1 trillion. So I think you're only going to see an upside in terms of total volumes in terms of housing, and especially in the home loan segment there is a huge opportunity of growth.
So you are penciling in so much upside. Now there are certain traditional businesses that have spun off into real estate. The likes of, you have Century Textiles, you have Raymond. These companies have spun off away from their textile businesses and come to real estate. Do you think this place still has room for everybody to grow at the same time? Do you think competition is always welcome over here?
I think it's very good that new people are coming and corporates are coming, but there is consolidation in the line. So if maybe 5 years ago there were 20,000 developers in the Mumbai metropolitan region, now there are only 12,000. So consolidation is definitely taking place, but new corporates which have deep pockets are most welcome in the line, because they will be able to deliver and want to deliver quality and want to deliver customer care. All this is very important for the real estate industry because it brings about credibility, something which we will be looking forward to more and more from the industry.
All right, sir. My last question to you. The union budget is just around the corner. What do you think the real estate sector's budget wish list is looking like? And do you have any suggestions for the FM to incorporate in the budget announcement?
We have a lot of requests from the finance minister. One of them is rental housing. We see a lot of help as far as ownership housing is concerned, but we don't see anything as far as rental housing is concerned. And I think India needs a lot of rental housing. Even the richest country in the world, the United States, 50% of the population live in rental housing from birth to death. So, but we don't have any provision. So I think that is there. Number two, interest deduction, which is available for income tax rebate, has been stuck at 2 lakhs of rupees. We think it should be raised to 5 lakhs at least, because there has been inflation over the period of years. So I think that is important. Third important thing is the difference of capital gains. Capital gains in the case of capital markets or the stock exchange is 1 year and 10%. While in the case of real estate, it's 3 years and 20%. So I think investment in Makan is equally important as the stock market. So I think somewhere we would request the finance minister if she could really consider these 3 points. We have several others, but since you asked for 3, I've given you 3.
All right, so perfect. Thank you so much for taking the time out and interacting with us at ET now. Thank you so much.
Thank you.